Hi, it's Dustin Miller, and today I'm going to be talking about US Treasury bonds, in particular, those bonds held by foreign nations such as China and Russia, and what has been going on in the past few weeks that is concerning for the stability and future of the US petrodollar. So a month ago, I was looking at these TIC data, Treasury International Capital data, and it was showing that China dumped the second largest amount of US Treasuries in history. The problem, of course, is that the data is stale and often backward looking. So here you can see in December, China dumped nearly 50 billion US dollars of its US Treasury holdings. Here's a graph superimposed over time, going back to 2001. So you see, most recently, this is the second largest amount of US Treasuries it has dumped since about December 2011. So for a much better and up-to-date indicator of what foreigners are doing with US Treasuries in near real time is called the Treasury Securities Held in Custody for foreign official and international accounts. So this is a data series provided by the US Federal Reserve Bank, which, as the name implies, shows what foreigners are doing with their treasury securities held in custody by the Fed on a weekly basis. So in this data for the week ending March 12, 2014, treasuries held in custody by the Fed dropped to $2.855 trillion, a drop of $104.5 billion week over week. So this is the biggest drop of treasuries held by the Fed on record. So foreigners were really busy selling. I created a little time series graph here to see the magnitude of the selling. So this brings the total US Treasury holdings in custody at the Fed to levels not seen since December 2012, a period in which the Fed alone had monetized well over $1 trillion in US paper. So this is the proverbial beginning of foreign dumping of US paper. Could Russia simply have designated a different custodian of its holdings? No, because as of most recently, it owned about $139 billion worth of US treasuries, or well above the number sold, and a custodial reallocation would mean all of the holdings would be moved, not just a portion. So here's what the bond experts at Stone McCarthy had to say. We don't have a ready explanation for the plunge in custody account holdings. One thing that what that is striking about the drop is that the last several days was not about a period of heavy market buzz about central bank selling of treasuries, at least to the best of our knowledge. China and Japan are by far the largest holders of treasuries, with holdings of $1.269 trillion and $1.183 trillion in as of December, respectively. So China's holdings are more skewed to central bank holdings. Selling of treasuries would appear to be at odds with China's recent efforts to appreciate its currency, although on March 5th and 6th there was a brief correction in that trend. They go on to say, as for the timing, the Wednesday to Wednesday decline was much larger than the week average decline in Treasury holdings of 46.6 billion. This implies that the plunge in Treasuries occurred later in the week rather than earlier. So to me, this means either China is selling treasuries and buying euros to make European import power stronger. If not, so much of its exports, much to Draghi's ongoing horror, or Russia which may be dumping U.S. Treasuries to support the ruble, or Russia's just dumping just because, in spite of U.S. interests. So, of course, China is one of the culprits suggested to have withdrawn the near US dollar equivalent paper. A far likelier candidate was Russia, which is well known and has a modest falling out with the West in general, and its financial system in particular. So it turns out what Russian official institutions may have done with their treasuries, and the markets won't find this out for sure until June 2014. It was merely the beginning of what's about to unfold. So Russian companies are pulling billions of dollars out of Western banks, fearful that any U.S. sanctions over the Crimean crisis could lead to an asset freeze, according to the bankers in Moscow. So Sberbank and VTB, one of Russia's giant, partly state-owned banks, as well as industrial companies such as energy group Lukoil, are among those repatriating cash from Western lenders with operations in the U.S. VTB Bank has also canceled a planned U.S. investor summit next month, according to its people. So this makes markets very nervous. This was making markets very nervous before Sunday's Crimea referendum on secession from the Ukraine. And traders and business people fear this could spark Western sanctions against Russia as early as Monday. And it probably will. What it will do is force Russia to engage China far more actively in bilateral trade and ultimately to transact using either rubles or renminbi and bypass the dollar, perhaps even using things like gold, something which we saw the price of the yellow metal push itself to 6-month highs. So it also will make financial ties between the two commodity-rich nations even closer, while further alienating their mutual imperialist devil, the United States. So, of course, here us in the West think like the West, and we assume that all that matters to Russia is the closing level of the MI6, so that a sufficient plunge in Russian stocks would have been enough to deter Putin. After all, the only thing everyone in the United States cares about is the S&P 500 closing at yet again another all-time high. So what the West didn't realize, as I've predicted a few months ago, for Putin, it is orders of magnitude more important to have the price of commodities, primarily crude and gas, high than seeing the illusion of paper wealth, also known as stocks, hitting all-time highs. So especially since in Russia an even smaller portion of the population cares about the daily fluctuations of the stock market. So the bottom line is that Russia, thinking a few steps ahead, already has withdrawn the bulk of its assets from the West. And why not? Recall that a year ago it was revealed that the same Russians who were supposed to be punished in Cyprus had mostly withdrawn their funds in advance of the bail-in. They tend to know what is coming. So it was the ordinary Cyprus citizens who had done nothing wrong who were the most impaired. So while the Russian response is already known, we wonder just how true is the inverse. Just how prepared is the West, and especially Europe, to exist in a world in which a third of Germany's gas is suddenly cut off? I can't wait to find out in the next upcoming weeks. So if you have any questions on U.S. Bond prices or international currency wars, feel free to get in touch with me, Dustin at dustin-miller.ca.